Hello, good evening, everyone, and welcome to tonight's live stream. My name is Joe Chris, and I am from Opus Independence, the social enterprise that runs the Festival of Debate. Now, the Festival of Debate is an annual programme which brings people together to share new ideas that can help shape our understanding of the world. This year's programme is Pay What You Feel to ensure all of our online events are free at the point of access, but we do rely on donations from audience members to help us make the festival happen. You can donate to the Festival of Debate by going to www.festivalofdebate.com, and we'll also be sharing a PayPal link tonight in the chat. The festival team will be monitoring the chat box tonight. We'd like to ask all audience members to be respectful of others, and we'll remove anyone from our events who does not follow our safer festival policy, which is available on our website. If you'd like to ask any questions tonight, please do use the Q&A function, and we'll get to those a bit later on tonight. I'd now like to introduce Jeff Cox, who is the chair of tonight's event. So Jeff, if you could turn your video on, that's lovely. Thanks, Jeff.
Thank you, Joe. Yes, my name's Jeff Cox. I'm representing Green New Deal UK in facilitating tonight's event. There's a South Yorkshire hub of Green New Deal UK, so I'm locally based. Just in terms of the Zoom etiquette, if people could mute themselves, please, that would give a better sound quality for everybody. This event is being live streamed and is being recorded, so if you prefer not to be seen on screen for any reason, then please feel free to turn off your video. Just to repeat about the Q&A and the chat, by all means use the chat. If you want to say, hello, this is Jeff, I'm from Sheffield and it's raining, you can all do your own equivalent to that if you wish. So use the chat by all means, but if you could put any questions for the panel in the Q&A box, please, it would be easier for us to monitor that. I'll be keeping an eye on it, and Lindy Stone has also agreed to keep an eye on it in case I get hopelessly lost. Okay. Shortly, we'll be hearing from the three speakers who we've got lined up for tonight, and they will introduce themselves more fully, but just to give you a sense of what's coming. The first speaker after the video is Ryan Jude. Ryan works for the Green Finance Institute, and Ryan will be talking about the range of new, innovative and emerging financial products that can fund a Green New Deal investment. We've then got Joseph Holmes, who's the Chief Finance Officer of West Berkshire Council. James has got some, Joseph has got some experience of using those alternative models, and so he'll be talking about West Berkshire's experience of that. Then Karsten Young from the Institute of Public Policy Research will be reflecting on the potential for this kind of investment to stimulate the economy here in Sheffield, and if we do it right, the extent to which that we can focus that economic recovery and hold it into the Sheffield South Yorkshire area and make the most multiplier effects of it there. Andy Shepherd, who wrote the Arup report, you may remember that was published in March. Andy Shepherd of Arup isn't a speaker per se, but has joined us tonight and is happy to answer questions when we get to those later on. So there's basically about an hour of speakers and half an hour of debate. I'd like to hold the questions back until everybody's spoken, and then we can get more interaction between the panelists on the questions, if that's okay. But please put them in the Q&A box as they occur to you. Okay, so to start things off and give us a welcome, we've got a video from Natalie Bennett. Natalie is the ex-chair of the Green Party, now Baroness Bennett of Manor Castle. Natalie wanted to be here today, but she was double booked. So to show her commitment to the event, she's recorded a video for us, which is about 5.5 minutes of running time. So Joe, if I mute myself, could you play that for us, please? There's no sound, Joe.
Welcome to the Festival Debate Green New Deal event. I'm honoured to have been given the opportunity to say that, and very sorry that I can't be with you in person, as much as anyone's in person these days, due to another event. But in making a little introduction, I thought there were three things that I could perhaps usefully reflect on. The first, which is kind of obvious, but I think needs to be said, is the urgent need for a Green New Deal now. We have a situation where, as a right-wing radio host said to me recently, everyone's talking green now, and that's true. But what we need is action, and the Green New Deal is one way of framing the kind of action that we need. And we need that action for environmental reasons, obviously. We are trashing this planet. The climate emergency, the collapse in biodiversity, soils, plastics, the state of our waters, the list goes on. But what is perhaps less focused on is we're doing all those things while also creating a thoroughly miserable, poverty-riven, unequal society. So the need for change, the fact that change is going to come, comes as much from the social pressures as it does from the environmental. And one of the things that in all the horror and tragedy of COVID we've discovered is that we can change things really quickly when we need to, when there's an emergency. And this is an emergency. And then briefly, a question of why Sheffield, particularly to talk about a Green New Deal. Well, I think we don't celebrate enough the fact that Sheffield has a tremendous pioneering political history. Behind me is a suffragette poster that reflects the fact that Sheffield was the first place in England to have a suffragette society, a suffrage society ahead of London. And of course, there was also the wonderful Edward Carpenter, a Green before there were a Greens, and also an amazingly brave campaigner for gay rights in the Victorian era. So Sheffield is the kind of place that can pioneer, and we now have, in a much more fluid political situation, the real chance to do things differently on the council. But mostly I wanted to talk about what a Green New Deal is and what it isn't. What we often see presented is, pictures of people in hard hats and solar panels and wind turbines and insulation and maybe if we're lucky, some lovely little snazzy electric buses. And all of those things are obviously part of the Green New Deal. But what we also have to understand as part of it is social innovation, is a different kind of society. A society that perhaps has a 4-day working week as standard with no loss of pay, going down one day maybe to a 3-day working week. That not only ensures that people can perhaps travel less, emit less carbon through doing that, have less demand on our public transport, but also means that people have more time to contribute to their communities, to care for each other, to support each other, to just spend time with friends. If we have a universal basic income, that gives people security to use their talents, use their skills. And I would say that a UBI has to be part of the Green New Deal. And of course, the UBI Labs network has been growing very rapidly, very exciting political development. But it also really does mean doing things differently. Sometimes I think we sort of go, we need a just transition, and that's absolutely right. We have to make sure that no community is left behind. But people interpret a just transition being, we take this, man, it probably is a man working in the in oil drilling, and we convert them into a rigger for solar panels or for offshore wind turbines. That will probably happen for some people, but it's not necessarily going to be a one-for-one job shop. We have to get to a society where we have less stuff but have more life, where we don't have to be defined by our job in quite the same kind of way, but a society that values the contribution of everyone, caring, roles that are so often poorly paid, they need to be properly paid and respected. I get angry sometimes when people talk about, what we need is more aspiration. Now, what I would say is what we need is more opportunity and much, much more respect. Whether it's a street sweeper, a school dinner lady, the bus driver, these are all absolutely crucial jobs. They have to be paid properly and respected. And that has to be every bit as much as a Green New Deal as shiny new technology. We're not talking about business as usual with added technology. We're talking about a peaceful transformation of our society so it works for the common good while we operate within the physical limits of this one fragile planet. There's enough resources on this planet for everyone to have a decent life, for us to look after the natural world, get the climate to a stable place, if we just share it out fairly. And that, for me, is the basis of a Green New Deal. Thanks, and I look forward to hearing reports of your discussions tonight. Thank you.
Jeff, if you'd like to turn your video back on.
Yeah, can't be trusted here. So I feel like I want to say thank you, Natalie, but I can't. But thank you, Natalie, nevertheless. Okay, so a few points for me before we start with our main speakers, and I want to pick up from Natalie the issue of the scope of the Green New Deal and the scope of the Arup report, which was mentioned earlier. If you remember, the Arup report was commissioned by Sheffield Council and is entitled Pathway to Zero Carbon. Joe, could you just put the PowerPoint slides up, please? Here we go. Okay, this has got scrambled a tiny little bit, but let's not worry about that. The first five items in this list were all included in the Arup report, which is what the second column says. And the Arup report was related to decarbonisation. So that's what they're all about. The bottom three items, the restoration of public services, nature recovery, and nature-friendly farming, those are sustainability issues, society thriving issues, and they are included beyond the decarbonisation items in the Green New Deal agenda. So when we're talking about Green New Deal, we're talking about that list of 8 things in the middle, and the Arup report dealt with 5 of them. So they overlap, and so let's not get hung up on that. I was tempted to call this funding investment in the Arup report, but I thought we should stick with Green New Deal. The 2 right-hand columns relate to public funding and alternative means of funding. Now, those columns look ripe for somebody to put a tick in some of them and a cross in some of them, and that is just got a mental process that needs to follow in due course after this presentation. We cannot deal with 16 columns or 16 boxes related to 8 items here tonight in one sitting, but I think as we go through the evening, you will start to see where those ticks and crosses start to appear. So that's the idea of just showing how Arup and Green New Deal relate to each other, admittedly in a very simplistic way, but just so it doesn't become a problem for people following the debate. Joe, could we advance to the next slide, please? Okay, so this is a straight lift from the Arup report, showing that public money is available for those 5 items that Arup reported on. The first one, if I just pick that out, homes, I've put Green Homes Grant in square brackets because at the time that Arup was written, that was available. It's now no longer available, but the next item along, the Green Home Grants Local Authority Delivery Scheme aspect of it is still going. And that's the nature of these things, unfortunately. The item below the line is the Environmental Land Management Scheme. This relates to land use, which wasn't in the Arup list, but is in the Green New Deal list. So these are sources of government grants or government funding that is available. So for some of those columns, there are some ticks of sorts to be put in. And then Joe, the last slide from me, please. What I think we get from the Arup report and from watching the newspapers, reading the news, is the unreliability of those central government grants and the Green Homes Grant, taking it as an example. I think our experience of the way national government operates, and perhaps this national government more than most, is the money will come through too little, it will become through too late, and it will be too uncertain or too conditional. It will have to be bid for before a certain date. It will have to be spent before a certain date. The rules will change, the feed-in tariffs for solar energy, whatever it is, all those things will be politically determined and do not provide a sound basis for local government or regional government to plan sensibly and rationally and efficiently. So there will be money from central government grants, but my contention is we can't rely on that. So this is the crux of tonight's, the starting point and the crux of tonight's event, that we must be prepared to look at alternative sources of funding, of investment funding, where those alternative funding mechanisms make sense. So we want to hear about what they are, and we want to have some idea of experience of them, and we want to stimulate our own thought buds in terms of how we can use them here in Sheffield. So with that, I'm teeing up Ryan, and I'm going to switch myself off. Ryan, over to you.
Great, thanks, Jeff. I currently can't share my screen. That's one for you guys to look at. I don't know, you guys have my slides on backup if you want to get them up.
You should be able to share them now.
Fantastic. Okay, let me just put that up. Thank you. So, evening everyone, and thanks, Jeff, for that perfect setup for the presentation I'm going to be giving. So, I'm Ryan Jude. I'm an associate at the Green Finance Institute, and I'm going to be talking tonight about the new and emerging green finance funding sources that are available to local authorities to help fund the transition to net zero and indeed fund a Green New Deal investment in Sheffield and across the country as a whole. Also want to look at how it really dovetails with some of those public funding sources that are coming out, because at the end of the day, funding the transition is not going to be cheap. Trillions of pounds of investment will be needed. The Committee on Climate Change in its sixth carbon budget said that £250 billion will be needed by 2050 just for upgrading the UK's homes. So that's just one subsector of a meaty sector. So with the amount of capital needed, it's going to need a combination of public and private capital. But happily, I'm here to say that there are these financing models emerging in the work we're doing at the Institute and also in the wider green finance ecosystem. But before that, very quick background on the Institute for some of the context as to what it is that we do. So the Green Finance Institute was established out of the back of the government's Green Finance Task Force in 2017. A series of experts came together and put forward a set of recommendations to the government on how to green the economy. The first recommendation in that list was to establish a centre for public-private collaboration to decarbonise the economy, and that's what became the Green Finance Institute just under 2 years ago. You can see here that our mission is to accelerate the transition to a net zero economy by mobilising capital towards real economy outcomes. Now, how do we actually go about doing this? We design and develop new financial solutions alongside those in the market, alongside policymakers, but also work with those instruments that are already coming out to help scale them. We do this with our sector-focused coalitions. So our main flagship coalition was on the built environment, which I will talk a little bit about later. And we've just today announced our transport coalition as well as work in nature. On our wider collaboration piece, we also work on several things which are listed on the right-hand side here, but the most substantial of these, we've recently been asked by Treasury to co-chair the UK Green Taxonomy's Technical Advisory Group. For those who don't know what the Green Taxonomy is, this will be looking to define what a green activity or green investment truly is, which will be transformational for not just the green finance space, but for business in general, as they will have to report on how green their revenues are and how green their earnings are, allowing consumers and investors to make a more informed decision about the sorts of companies that they support. So in essence, there's lots of systemic change that we are hoping to achieve, but I always like to say that the most important part of our mission is that we need to reframe this whole discussion as not just a cost or a problem that we have to solve, but as an opportunity and as an investment. Investment is in the name of today's event, and that's how it should be seen. It's a unique opportunity to invest in green areas to create green jobs and to improve health all across the country. So on to the meat of the discussions today, which is certain financial solutions. The first one I put up here is a community municipal bond or community municipal investments. So it's really great that Joseph Holmes from West Berkshire Council is talking after me, as the first one of this fantastic emerging financial instrument was launched by Joseph in West Berkshire last summer. So what is a community municipal bond? In essence, it's a bond issued by a local council which is invested into by individuals. So you and me, for as little as £5, we can invest into these instruments. And why would we want to do this? The reason for this is really twofold. For us, it's that we would be earning a return that's better than our cash being sat in a bank account. So the instrument in West Berks and the second one, which was in Warrington, gave a 1.2% return to every individual that puts their money into it. From a local council's perspective, that 1.2% was slightly lower than the financing they can get from local government. So it brings down the cost of borrowing for the council. So there's a win-win here. But crucially, it helps with community wealth building. So also seeing what your money is doing in your local area. By the very essence of it being similar to a green bond, that money raised has to go into some sort of green activity. So it could go into solar panels for public buildings in the area. It could go into retrofitting buildings. It could go into co-funding a new wind farm, a new solar farm nearby the constituency. So it's a real good way for the money to be raised from a different source by the council in an era where funding is very restricted by councils. CMIs are really here to stay, and we expect there to be a lot more of these coming in the next few years. I'm sure Joseph will speak about it in much more detail and much more expertise after me, but we are currently working with Abundance, which is the company that has really pioneered these, on plans to help this scale in the lead up to COP26. So do watch this space if you want to see more about CMIs in the future. The second one is a slightly bigger finance facility, which is what we're calling a citywide blended finance facility, or even a regional blended finance facility. So blended finance is a fund that is established with public money and private money going into it. We've been working with the GLA in London to develop one of these to invest specifically into retrofitting buildings in London, with some money coming from the GLA and some coming from longer term pension funds. This could be a model that could be replicated across the country, perhaps not necessarily just at the level for Sheffield, but at a wider county level it could also be coming in. This is another good way to mobilize capital because it aggregates projects. The issue with a lot of things such as retrofitting buildings is that the amount of capital for an individual building is quite small. But when you bundle that together into hundreds or thousands of projects, it gets financiers more excited and more willing to put their money into it. And in a world where there is more capital being made available to invest into these activities, we need facilities such as this to act as a conduit to actually get it through to the projects. So this is another way that's being established at the minute, and we expect to see this sort of thing being replicated across the country. But whilst the GLA can invest into it for the public side, other areas in the country aren't as lucky, which brings us to another potential way to help fund such facilities, which is the UK's new National Infrastructure Bank. So for those who aren't familiar with what a National Infrastructure Bank is, this is going to be a publicly funded bank that will invest into green infrastructure across the UK. And crucially important for this, it's going to have £4 billion set aside to lend specifically to local authorities for green investments. This has been called for by all parties for years now, ever since the UK sold its old Green Investment Bank back in 2017. Green investment banks have been very successful in the past for helping build up new areas of investments. Publicly backed banks that invest into green projects have helped scale, in the UK, for example, the offshore wind market, which was fairly nascent before the Green Investment Bank was first launched back at the end of the 2000s, in 2009. And it's one of the main reasons why the UK now has the largest offshore wind capacity in the world, with 40% of the world's offshore wind production being in the UK. The new UK Infrastructure Bank should do similar in emerging technologies. So it shouldn't be investing in the likes of offshore wind, which have a fully fledged market now. It should be looking at things such as the built environment, such as potentially hydrogen production or financing for nature. These new areas that we know need financing, that the Green New Deal says need financing, but for some reason, private investors see them as too risky at the minute. So this is going to be a crucial tool for years to come to help achieve this. It's been capitalised at first with £22 billion that can be invested across the country. But the idea is that 22 billion will also stimulate more private investment, thus achieving a larger leverage effect, allowing more green infrastructure to be built across the country. We expect to be able to hear more about this in the summer when the principles are issued about what they're actually going to be investing into. But again, this is something that all political parties have been calling for years now, and it's going to be crucial as we look to scale these investments. So, as the focus of the Arup report was mainly on the built environment, and because our flagship coalition is on the built environment, I wanted to quickly touch on some of the emerging solutions we're seeing in the built environment sector. As I mentioned earlier, the CCC, the Committee on Climate Change, has said that we'll need £250 billion of investment by 2050 for all homes to reach the top EPC standard, or energy performance standard. They've also said a further £110 billion will be needed for public and commercial buildings. But again, we shouldn't see this necessarily as a cost. We should be able to see this as a £360 billion investment opportunity. We chose the built environment space as one of our first coalitions because the technology already exists. But for some reason, we aren't seeing the finance or the economics working in a way that is getting the capital to flow. The stat that I like to refer to here is that last year, despite heat pumps being something that exists, we only saw 25,000 electric heat pumps installed. But we saw 1.5 million new gas boilers installed into homes that were replacing old gas boilers. If we're going to achieve the net zero targets that we have in the country and that local authorities have in their climate emergencies, we need this to flip completely round. So one of the financing solutions that we've been working on here is one called PACE, or Property Assessed Clean Energy. This is a new type of loan from banks to individuals and corporations. It's not public money, but it can be facilitated by governments and local authorities. I say new, but it's new in the UK. It's been very successful for years now in America, where it operates across 40 states and has mobilized billions of dollars of capital to retrofit buildings. It's also, as you can see, created 42,000 jobs across the country. So when we talk about creating green jobs, this is a perfect way to help build that new supply chain and get more jobs in the country. What PACE does differently is that it's secured against the property, not by the individual. So if I was to take out a PACE loan on my home and then move out, that liability would pass on to the new homeowner that comes in instead of me. What this does is it helps reduce the risks to the bank. Not only is it secured against the property, but also it has longer term payback periods, thus meaning they can bring down the interest rate, bringing down the annual cost to the person that's currently repaying the loan. The way it functions is similar to a property tax. So the payment for it would go out on a tax bill monthly instead of having to be paid separately. I talked right at the start about the fact that we have this coalition approach to the Institute, and the first thing we do before we start developing solutions is look at the barriers to investment. And some of the main barriers to investment are got over by PACE. So one of these is the temporal split incentive, which is a fancy way of saying that payback period. A lot of loans are shorter payback periods, meaning that a lot of the repayments are front-loaded. By dragging it out, you can reduce that annual repayment. It also gets over the issue of limited personal savings, as it often can finance 100% of the upfront costs. Another key one on here is the owner-renter split incentive. So when we come to the private rented sector, a big issue with the built environment is that it is the landlord that takes out the loan and that repays it, but it is the person living in the home that's actually gaining the benefit of it. PACE helps to overcome that in terms of it can be structured in a way that some of the benefits of energy savings can be taken by the tenant and some of them by the landlord, thus giving an incentive to both of them to ensure that they perform the energy efficiency in the home to the best standard. One of the main things that this often gets compared to is the Green Deal, which for those who weren't aware of the Green Deal, it was an on-bill financing method that the UK government helped set up just over 10 years ago. The issues with the Green Deal were that they were not secured against the property and they had shorter payback periods, meaning that the interest rates on them could often spiral out of control. And crucially, they couldn't fund 100% of the upfront costs for retrofitting in homes. PACE, we believe, can overcome all of these same issues, and we are currently working with one of the devolved nations to explore a pilot opportunity in the UK. Final one I want to touch on is not a financial solution per se, but it's one that we think can be very revolutionary in the built environment space. It's what's called a building renovation passport. So these will again be very revolutionary for the market if widespread implementation occurs. Essentially, a passport is a data book for an individual building. It shows what needs to be done for this building to achieve its optimum energy efficiency and what has already occurred. It also helps explain the financing options that are available, so it acts as a facilitator for all the other solutions that I have just listed. We've been working on developing a green print for this, as it's being called, or a framework that's currently open for consultation. But if this does gain the widespread take-up that we need, we see this being the perfect way to get finance flowing into retrofitting buildings. Again, it's one that we aren't reinventing the wheel. It's been successful in certain states in Germany. And again, hopefully we will see this being picked up in the UK in the next few years. So there's a little taster of some of the innovative ideas that we've been working on and that are emerging across the country. I hope it's given a bit of confidence that the money is coming and we can find a way to pay for the Green New Deal in Sheffield and in the wider country. If you want to find out more, please do check out our website, and I'm looking forward to the Q&A later. But thank you for listening.
Thanks, Ryan. That's fantastic. If you look in the Q&A, Ryan, you'll see the second question from Matthew is related to you, but we're not going to answer it now, but just to make sure you look at it. So, Ryan, that's fantastic. Thank you ever so much. And Dave, we'll get back to your question at the end as well. So I'd like to invite Joseph, who's on the opposite side of the counter, if you like, as someone who is looking at these shiny new green things on offer and deciding which ones would suit them and the commercial economic rationale for it. So Joseph, over to you, please.
Yeah, thank you very much, Jeff. Hopefully everyone can see this. So my name is Joseph Holmes. I'm the Executive Director of Resources and the Chief Finance Officer at West Berkshire Council. And we are a unitary council in the south of England. There's a picture, a sort of cartoony type image of Greenham Common, which is within our district area. And there we are kind of in the red. We're sort of right in the middle of the south of England, kind of between Reading and Swindon, Oxford above us and sort of Winchester below us. So I just want to talk to you a little bit about our experience of the community municipal investment. And we have an environment strategy. Like many other councils, we have declared a climate emergency nearly 2 years ago, trying to get to net zero by 2030. I'm not going to talk too much about that, but that is our sort of trajectory that we have set out there. Now, we were having a look at different ways of financing how to get to net zero. And one of the areas that we looked at was the community municipal investment, which I just kind of call the bond now for sort of shorthand at the moment. But normally how a local authority will borrow is mainly through the Public Works Loan Board, which is part of HM Treasury, so we can go to government for borrowing. There are other forms of borrowing out there. Some councils have issued bonds directly into the financial markets, use of private finance or income strips or other models, but the Public Works Loan Board, PWLB, takes up a significant chunk of where we go to borrow at the moment as a sector. So we had a look at bonds, because this graph here just shows the rates that we could borrow at kind of during 2019-20, and you can see there was a sudden spike in the sort of autumn at the end of 2019. So sometimes our rates can get increased or decreased by central government, and at that point in that autumn, they were suddenly increased. So that also sort of sparked our interest that that's the main place that we go to borrow, but they had suddenly jumped up. So there was an interesting thought to be had around how could we access alternative forms of financing. So we had a look at this community municipal investment, which was off the back of a Financing for Society report from the University of Leeds, who are also working with an organisation called Abundance Investments. And when we looked at the bond, we thought, well, it must beat PWLB. It has to beat the rate which was set there, because if it didn't, and somebody invested in our bond, we would be actually subsidising those people to invest. So that didn't seem right at all. And as sort of chief finance officer, really important for me that we are trying to access cheaper forms of borrowing. It's also really important that we have a bit of greater sort of control over our future financing. This bond was just for £1 million. I saw some of the numbers quoted in the Arup report earlier. It's clearly not going to make a significant dent on that, but it was a pilot. But some of these schemes that I'm sure you've engaged with, are very long term. So you want to have some element of future control over that financing. Wanted it to invest in our environment strategy, that was clear. And really importantly for us as well, borrowing from central government is absolutely fine. The transaction is very simple to do and very, very quick and easy. But there's no engagement with our residents as part of that in helping to enable us to tell our story around what we wanted to do in our environment strategy. And also as part of the bond, we've got some external funding to do some research and actually what the impact has been. So we have an underlying borrowing need of about £15 million. How the bond actually worked is that it enables retail investors, so any individual in the UK to invest through with the council. We provide the investor with a return, as I said, lower than the PWLB rate, and at 6-month intervals, the individual receives their return. And the minimum investment was £5. So we tried to open up to as many people as possible. And Abundance did all of the work to administer the scheme. Local authorities, many decades ago, did issue a lot more bonds directly themselves. But the sort of transactional cost of that was quite expensive. But now things are very different, and all of this was done online, so it brings some of those transactional costs right down. And we were part of a pilot. I said we got some external funding, so we were a pilot with other local authorities where we each received a small amount of funding to help complete our due diligence around how the scheme would work. It was mentioned earlier about hard hats and sort of solar panels, so that sort of klaxon can go off here that I've managed to get a picture with both of them in there. And we launched a scheme in mid-July last year. The picture there is from the Times, who picked it up, and we wanted to complete the £1 million within 3 months, which we did kind of a couple of weeks early in early October. We had lots of engagement, both locally and nationally, and lots of interest, which was great. Obviously, we were launching right in the middle of the COVID pandemic, so how we went out to people was very different to how we would have normally wanted to engage with our residents. It was all done online. Hopefully, in the future, if we were to do another one, that would be perhaps much easier. So this just to give you some figures around this. I'm not going to go into every single one, but what was really interesting for us is just under a quarter of the total amount of the £1 million which was invested came through from local investors. And a local investor averaged nearly £3,500 as their average investment, whereas outside of the local area, it was £1,500. So if we could attract local investors as part of this, and hoping that's part of them buying into what the council is doing, and that feeling of it being much more sort of hyper-local and real to them, they were willing to put more money into the scheme. And then in the bottom right-hand corner there, that just shows so where people from across the UK invested. West Berkshire was the main amount. I'm not quite exactly sure if one of those dots exactly hovers over Sheffield, but it certainly looks like there might be 1 or 2 dots which were pretty close there. But you can see that there was quite a large geographical spread across the country of where people were investing. And just in the bottom, in the middle there, just sets out the amount that people were investing. So the total investors, we had around about a quarter invested less than £100, and well over half of the investments were less than £500. So there was quite a spread as well as to what and how much people were putting into the bond. So one of the interesting things as part of this is that so any investor gets their money back every 6 months. It's done on an annuity basis. And we only last month we provided that investment return back. But one of the interesting pieces of this is that we allowed people to donate their investment return back to us if they wanted. We didn't push it at all. We just left it there as an option for individuals to do. And about 16% of the total investment returns were actually donated back to us, which was really interesting. And that's meant that we've been able to plant over 2,000 more wildlife seeds around the wildflower seeds around the district as part of our wildflower verges scheme, which is great and a real enhancement. And it helps also tell some of that story around why we've done it. And I should have mentioned earlier that here's some pictures of some of the schemes that we utilised the £1 million funding for. So we kind of did some solar on different roofs across those schools, leisure centres, Upper Greenham Common, council offices, and a social care facility as well. But we also used some of the funding where we work with the local wildlife trust to sort of amend some of the sort of walking infrastructure as well, and also cycling infrastructure. We then used it to support some of the environment strategies themes around LED replacement and flood alleviation, tree planting schemes as well. So we try to use it on a range of projects, which helps us tell our story around what we're doing on the environment strategy over the coming years. And lastly, just a few reflections from myself. So we use it specifically around the environment strategy and kind of the climate emergency, but it has applicability, I think, to other areas of funding. Spoken about housing earlier on this agenda this evening. I think it's probably more suited towards shorter term borrowing, about 5 or 10 years, but it'd be interesting to see if there's a market out there for a longer period of time. It certainly has taken longer than if we went directly to the government, so we had to put a bit more work in. So there's a bit more work locally to do as part of that. However, I think the benefit of engaging with both residents in the districts and outside as well, I think has been really important, and I think has been justified through seeing that donation element come back to us. There is always still a need for the PWLB or the new Green Infrastructure Bank, which was just mentioned a minute ago, which I think is really interesting. Also, there was a lot of due diligence and commercial look on us as well, and that was as well as due diligence that we did on the other organisation, which was really important. So kind of in some ways, it's a very useful tool for us to have, and it certainly generated a lot of interest, which is great, and it really helps. I think us to connect more around what is a really important strategy for the council.
Thank you, Joseph. Thank you very much. So we're not doing questions yet, but Graham has asked about sharing the PowerPoints with attendees. So if Joe could answer that at some stage when we finish, that'd be handy. Oh, sorry, when we finish the presentations, that'd be handy. Pete and Mary have asked about repayment sources. So Joseph, that's one's for you later. And Jenny has asked about interest rates, and that's one for you, Ryan, later. So we're not having them yet. So let's move on then to the last of our presenters tonight, Karsten, who's going to reflect on the economic stimulus that can arise if we can pull off this investment. So Karsten, over to you, please.
Thank you very much, Jeff, and thanks everybody for having me. So I was going to give a sort of big picture view on sort of the potential of a Green New Deal in the UK as a whole, but then also talk a bit about what it means for Sheffield and what Sheffield can do to harness it. And I think I've got 3 messages. Firstly, there is a huge amount of job creation potential in this. So sometimes people fear that going too quickly on climate change will destroy jobs. But we've done analysis showing that actually the opportunities that lie in the jobs far outweigh the costs to jobs elsewhere. So huge opportunity. The second point is that it does still very much depend on policy that comes from Westminster. So we can't do it without the central government, but Sheffield can do a whole lot to harness the opportunities that come from this and be prepared for generating those jobs. And the third message is that the jobs growth that comes from the Green New Deal, Sheffield can do something about making sure that these jobs stay in Sheffield, stay in the region, and aren't being created elsewhere in the country. Okay, so let me just take those 3 points in turn, and then very much looking forward to your questions. So the first point is on the jobs opportunity from climate investment. We've estimated that in the UK as a whole, over the next decade, we could create 1.6 million jobs over the next decade. That's a huge number, and that's almost that's almost 6 times the amount of jobs that have been lost so far in the COVID crisis. So really a big opportunity in terms of jobs. Which areas are these jobs, and which industries? We split them broadly into 3 areas. The first one is homes. The second one is transport, and the third one is health and social care. So as we've heard before, there's huge needs to insulate Britain's homes, which are below the standard that they need to be efficient. The government actually has set out quite ambitious targets to insulate homes across the UK to get them to a higher standard by 2030. And if we deliver on that target, on the government's own target, we estimate that about 560,000 jobs could be created, more than 500,000 jobs in this sector. And this is people insulating homes. This is people helping build new social housing. It's also people installing new forms of heating, so getting rid of gas boilers and putting in heat pumps, for example, or connecting houses to heat networks. So there's actually a quite wide range of jobs involved, from people actually doing it to people selling them, to the whole supply chain. So it's not just construction workers, it's also office workers, and people that work face to face with customers to get these improvements, these home improvements over the line. So that's really a big opportunity. Secondly is more than 200,000 jobs in a better public transport and better electric transport. So in the north of England in particular, there's a huge need to upgrade rail infrastructure, and this could be a big source for jobs. And again, it's not just the construction workers, but also the whole supply chain, and that is very much the case in Yorkshire and the Humber as well. Finally, often neglected, but a huge source for jobs is health and social care. So some of you may ask, what does it have to do with climate? We argue, and this is very much in line with what Natalie said earlier, we need to find new ways of consuming and producing that are less emission intensive. And health and social care are such industries. So they are clean jobs in that sense. And there's also huge social needs. So we estimate 700,000 jobs could be created in this sector only by filling the vacancies that are projected to occur. So we have a huge gap in the NHS in terms of staff, a huge gap in social care, and those could really be jobs engines across the UK, but in Yorkshire and the Humber as well. Let me get back to the issue of housing, and Ryan, for very good reason, talked a lot about this as well. We estimate that in Yorkshire and the Humber, there could be 30,000 jobs being created in the area of housing alone, in the sector of housing. About 20,000 people were helping retrofit homes, about 4,000 to 5,000 people building new social housing that is energy efficient, and the remainder work in upgrading the heating system. So that's the opportunity. That was my first point, and it's very much an opportunity for Sheffield as well. So where's Westminster at, and where should they be? We estimate that there's a gap currently in terms of funding, about £30 billion per year that the government is not committing to the climate transition, to the Green New Deal, and that really needs to be like for us at IPPR, it's still at the forefront of our minds to get the government up its ambition, and they have set out their ambition to reach net zero emissions by the year 2050, but currently they're just not putting enough money on the table to deliver on this, and they're not putting enough money on the table to generate those jobs, and so we're very much hoping that there will be a change of pace when it comes to overall funding. But that said, funding isn't everything, and I'd like to just explain this with one example of the Green Homes Grant. So, and I think this was mentioned earlier. Early in the year, in 2020, the government, as a COVID measure, rolled out the Green Homes Grant, which would provide £5,000 to £10,000 grants to people who would insulate their homes. But actually, only about half of the money was used, and recently the government terminated the scheme. And the reason was that it was, it was a crisis measure, so it was fairly briefly designed and put in place. And it was fairly popular. Actually, the North and the Midlands had some of the highest demand as a share of the population of the entire country. But the problem was that there weren't enough suppliers that qualified for providing these home installations. So there was sort of a mismatch in the local, on the ground, of people not being ready to provide it. And that partly had to do with training, but it partly had to do with information and people being ready and knowing how the scheme works. So that's partly why the scheme didn't work. So the design issues on the ground, and that's also the opportunity for Sheffield and other areas of the country for next time round. And there will be a next time round. And even though I hear what you say, Jeff, that you can rely on these schemes and they always change, but the government is coming forward with a new homes and heat strategy. It's supposed to be released any day now. And there they'll announce how they will spend £6 billion that haven't been spent yet on this over the coming years. And so there will be a follow-up for the Green Homes Grant. And so what Sheffield can do is to be ready for it and make sure that local employers and the population more widely is ready for it and knows it, understands it, and can act on it and can make use of the funds. And one thing that could be is training. So making sure there's information on what's needed. So working with local businesses and unions to have a strategy to get people upskilled and get people ready to do these home improvements once the funding is coming in. And also, of course, what Ryan mentions is also a fantastic scheme where funding could come from other sources. So upskilling and training to get ready for this for the transition of homes, awareness raising among the public, explaining these schemes to people, making it part of the city's green strategy and making the communication part of it. and then and perhaps also doing a local audit of the housing stock in the city. So looking at what type of houses have what types of needs. For which houses is there an opportunity for getting access to heat networks? Who might need heat pumps? Sort of taking stock and then feeding it back to the citizens of Sheffield, so they know where they are and what the opportunities are. And finally, also social housing providers could get ready, upskill their staff, and have a strategy for how they could make sure social housing is green. And my final point is that basically, if these things are put in place, if Sheffield has a strategy that links in with a national strategy, make sure it's ready, make sure the workforce is ready, make sure the citizens of Sheffield are ready and know how to take advantage of this, then that will also guarantee that the jobs stay local. So having the strategy for a local ecosystem that builds to improve homes, but there's other examples we can maybe talk later about in transport and other areas where there will be national schemes, where there will be funding from the private sector, and making sure the whole ecosystem works together, is aware of things, knows what they have to do, knows how they can get retraining. That will make sure that the jobs stay in Sheffield. I'm going to close there, and I'm looking forward to the Q&A. Thank you.
Thank you, Carsten. That was great. Some questions in the chat, some questions in the Q&A. I'm not sure if everybody in the Q&A, if everybody in the audience can see the Q&A questions. So I'm going to try and navigate us through that, but the panelists can see them. So the simple question first, Joe, if you're listening in, can you say something about the sharing of the PowerPoint slides? Can we put them in the chat?
Yes, we can. Yeah, we can share those and email them to all ticket holders afterwards as well.
Thanks, Joe. So that's your question sorted, Graham. Then there were a couple of questions, one from Matthew and one from Jenny, about the interest rates paid. This is perhaps more Joseph, but and also for Ryan, about the who bears the responsibility, if the revenues don't come in. So would either of you care to go for one of those questions?
Yeah, I'll have a go. Thanks, Jeff. Yeah, a very good question. I think I didn't mention in my PowerPoint. The important thing is, for all the schemes that we utilise, they were already in our capital programme. So there were existing schemes that we were going to do anyway. So the CMI was very much about a cheaper form of borrowing, which had all of the engagement benefit beside it as well. So we'd already set aside the funding for this. This just meant that we're able to borrow more cheaply. And on £1 million, we saved about £15,000 against the prevailing PWLB rate, which, if you scaled this up to if you're talking 10, 100 million pounds, however much of a market there is out there, you suddenly start getting quite a substantial difference on quite a substantial saving with the bond, which makes it really, really interesting. But no, we'd already set aside the scheme, so the funding was already allocated to it. So some of these weren't, we don't get any return back from putting up new paths or cycleways, for example, but we were already going to fund the actual scheme itself. So it's a cheaper form of borrowing for us. I hope that makes sense.
And in terms of the ultimate liability, the council taxpayers?
Yeah, rest with the local authority and the council taxpayers. So I saw there's a question there saying, I see loads of councils are going bust. So the vast majority of over 900 councils are not at all. But yeah, it would be with the local authority. But as I said, we specifically picked schemes which we'd already set aside funding for, so they're already part of our part of our capital strategy in the first place. So it's a funding and being set aside for them.
And presumably, Joseph, some of the repayments will come from revenue, for example, the selling of renewable energy that the solar panels have put onto the system.
Yeah, that's a great benefit of it. But I suppose to try and make it really simple, we think normally if we go into the PWLB, and at the time that we launched the bond, the interest rate was 1.7%. The bonds rate was 1.2%. So we were able to utilise that 0.5% saving, which I said was about £15,000 on £1 million. We were then able to utilise that for other things at the council.
Thank you. So two questions I'm throwing out now. One is to Lindy. As the questions are now coming in thick and fast, Lindy, can you kind of be prepared to rescue me when I get drowned? That's the first thing. And the second is, I can't see a full list of participants tonight, but if anybody is here from Sheffield Council who would like to try and answer any of the questions specifically about training, then please say something in the chat, and we'll invite you to answer. Okay, so Dave Campbell has thrown in a question about, Ryan, about the EU alignment of the financial markets. And if you can see that question, you can probably answer it better than I can scramble the question.
I don't have the question in front of me, but I think it was the one about how Brexit's impacted this. So it's hard to know exactly which parts of the policy have come about because of Brexit, but one that certainly has is the National Infrastructure Bank. So we lost the European Infrastructure Bank because of Brexit. And I think there was another question around the capitalisation. And to be quite frank, 22 billion, in my opinion, is not enough. The EIB was funding around £5 billion worth of infrastructure per annum in the early 2010s, which this will not be coming close to. But what we can do now is make do with what we're getting. And that's why it's really important to make sure that we utilise this money in the most efficient way, whilst also lobbying, speaking to the government about maybe capitalising this further in the future. The bank does have the option to draw down debt from the capital markets, which is great, but there is a limit on that as well. That's one part that's been impacted by Brexit. The other important part, I'm getting a bit technical there, is around the taxonomy. So I mentioned this at the start, it's going to be a definition of what constitutes a green investment. So when banks and when funds invest in something, why can they call it green? The EU has spent a decade developing theirs. After Brexit, we're going to be developing our own. It's going to be slightly linked to the EU one, but that's another part where we've slightly diverged. That's how Brexit's impacted a lot of the green finance policy.
Thanks, Ryan. So if I stick with you for a second, Ryan, there were two questions, I think, going your direction. Chris Broom has asked just recently about your reference to a lot of the infrastructure bank funding going to emerging technologies. So he's asked just for some clarity on that. And earlier on, Matthew asked about the scope and scale of the infrastructure bank. The scale was the 22 billion, and the scope was exactly what would it cover, or what range does it cover?
Got it, yeah. So in answer to Chris's question, it's a yes and no. So yes, in terms of the money going directly from the bank. So say it's looking to fund a large infrastructure project directly, that should be looking at emerging tech and where it can de-risk. The 4 billion set aside for local councils is slightly different. It's going to be essentially stepping into the PWLB, or the Public Works Loan Board space. And it's going to be offering, cheap lending. I think it's gilts plus 60 bips that they're going to be offering. So slightly different. So yes and no, apologies, that was slightly confusing earlier. To Matthew, I jotted this down. I think this was asking about if it's mandated for green investments. This might sound like semantics, but I would argue currently no. It's announced it has two core missions, which are net zero and levelling up. So they've stated that all investments will have a net zero screen. But until that is in legislation and mandated, it's difficult to say it has been mandated. But they have said that the intention is for it to be going net zero. Let's see what actually happens when the legislation comes in. We are hoping that it will soon be mandated, but currently no. The other point on scale, I've already touched upon, 22 billion is a lot, not enough. Aldersgate Group, before the announcement of the bank, called for an £80 billion capitalisation. So you can see there's quite a big delta there. But again, I think the point here is that we have 22. We should do what we can with it, whilst also trying to get more coming out in the future.
Thank you. Carsten, there's been a couple of questions, one from John Selby, one from Pete and Mary, about how we create that local workforce, about if you like the leading period of the cost of training, is incurred before the people get put to work, and just the mechanism of it. If I can just reply first from a very Sheffield perspective, and then can I just invite you, if you've got any wider comments on it. There's a body in part of Sheffield Council called Business Sheffield, whose remit is to bring together businesses and training providers to assess like on a sectoral level what future workforce needs are, what skills are needed, what the distribution of like professional, technical, more manual skills is in the mix. So that body is ideally placed to do this. I've been lobbying them personally for the last 4 months to try and get them ahead of the game and have arrangements in place before to start training people before those needs become manifest, and it's an uphill struggle. So if anybody wants to join in my lobbying for the Sheffield manifestation of this question, which is Business Sheffield, please do so. But there's a structural issue of who incurs the costs of doing the training before the workforce become actively needed. So there's an offset there, and are there any perhaps national schemes we could look for to pray in aid of trying to get this moving locally? Carsten, can you help with any of that?
Yes, absolutely, and really just to echo with what you said there, local councils and sort of the bringing together local businesses and pointing them to the training opportunities, to skills academies through some kind of referral system that can be informal, but ideally, ultimately, it would be sort of standardized across the country. That's a key part of it. There will be, of course, other routes. It may be via job centers, it may be via government advertising that people find a way for upskilling via skills academies. But the local council will always play a crucial role. And then on the issue of funding, completely agree that there needs to be central government support. If you look in the international context, the UK and England in particular performs pretty poorly when it comes to technical education. So compared to other rich countries, the UK has almost a quarter less funding per student than in other countries. So really, if we want to be world leading in the Green New Deal, we really need to be world leading in providing the funding. And that's really been worsened by austerity. So between 2010 and 2018, the funding for young people, for example, fell by between 12 and 25%. And the funding on adult education fell even more, by almost 50% over the same period. So that is a big reason why we're in the situation that Jeff mentioned. But luckily, the government has changed tack and has announced it will introduce new higher technical qualifications, and also has said it will make new funding available. So that is yet to be fleshed out, but there's things coming down the pipeline. And again, it's really important for councils and for people across the country to make sure that those schemes are adequate and actually suit the local needs.
Thanks. I'm not being fair to Joseph now, but Joseph, if you have any experience of that from West Berks perspective, please chip in.
I will do, Jeff. But I think Ryan's got his hand up as well.
Well, let's go with you, Joseph, as you're on.
Yeah, I think, to be fair, we don't have a huge amount of scheme, I suppose, experience at that scale. But I think I think it's something we are really interested in working with partners on what we can do around this agenda. We don't have, you mentioned housing before, we don't have a housing stock down in West Berks as well, so it's a slightly different position for us, but really keen to work on partners on this agenda.
Thanks. Ryan?
Yeah, I just wanted to build on what Carsten was saying. I think that we need to look at this as a systemic impact. So I speak a lot with those in the installer industry, and one of the chairs of one of the federations said that you can't currently pay a lot of his workers to train on how to install heat pumps because demand isn't there. And it's difficult to convince them to learn these new skills if we can't prove that demand and financing is coming through. So that's one thing that definitely needs to come, and agree with Carsten completely that this needs to come from government. So the government announced its Green Jobs Task Force towards the end of last year, yet to see what that's actually going to entail, but hoping that will bring a lot more down this line. But one of the stats I love to quote on this is that for every £1 million spent on energy efficiency, you get a jobs multiplier of 7.72 full-time jobs versus around 2.5 for an equivalent fossil fuels job. That stat in itself, especially after COVID, with the amount of unemployment we're seeing, young adult unemployment reached almost 25% towards the end of last year. This is a great opportunity for public money to be shown to be generating these jobs. So agree that we need to find ways to actually fund it on the local level, but we need to think about the longer term demand and policy incentives as to why they need to train as well.
Thanks, Ryan. Andy, we haven't had any questions specifically at you, but if I just give you prior warning that if you wanted to say anything in relation to that, like the buildings or construction workforce question, I'll come back to you in a second. But before I come to you, Andy, just to give you a chance to gather your thoughts, Dave Campbell asked a question about the relative benefits of investment in retrofit housing and an electric transport infrastructure. I suspect the answer is going to be both, but does anybody particularly from our panelists, want to respond to that?
I'm happy to say it shouldn't be an either or. Every single sector needs to be looked at, and we can weigh up the pros and cons of all of them, but they all need to be attacked, from public money, from private money, whatever it is. They all need to be looked at.
Okay, that's a quick answer. That's nice. And yeah, Carsten, please go.
Yeah, I just completely agree with Ryan. Maybe one nuance to add is that electric transport, if people buy an electric car tomorrow, it's already more cost efficient than fossil fuel driven cars, whereas the equation is slightly different for home insulation and for heat improvements, getting a low emission heat system. So in a way we need slightly more support on the housing side, just to address the economics of that. But otherwise, completely agree with Ryan that it's not an either or. We need to deliver on both. Otherwise, we'll never reach net zero emissions.
Okay, Richard from Sheffield City Region is offering to get me out of a hole here. So, Richard, would you like to unmute yourself, and you might want to just introduce yourself and then elaborate on what you said in the chat.
Jeff, but I'm not sure if it can work.
We can hear you, Richard.
Excellent. Yes, what I just said in the chat is that Jeff's lobbied me as well. So I'm the Net Zero Project Director for the Sheffield City region. So not directly just responsible for Sheffield City, but with the wider remit across the region. And we recognise this skills gap that's been mentioned a lot in the chat. There is also a supply chain gap as well. So I think it was also mentioned that the people are still replacing gas boilers with gas boilers. And that's twofold reasons for that. The houses aren't ready for heat pumps. It's not a straight swap over. And there isn't the heat pump supply chain, both in equipment and skills to do it. So it's not a simple solution. None of these things ever are, to just take all the gas engineers and train them to fit heat pumps. It needs to be a program of improvement to housing stock to permit them to use a heat pump. Heat pumps generally work at lower temperatures for efficiency. So putting one in an old Victorian Edwardian terrace will not work, and we'll have a lot of stranded assets that don't do what we need them to do. What we do have, however, is that housing stock. So we've got both in the public and private sector a large housing stock that we can use to induce that demand. So it's one of the jobs that I have at the moment, is to try and work out how we do that, how we convert this large stock of available housing, how we create the supply chain to meet that need. It's not a fantastic answer because it doesn't say we're on it and we're doing it tomorrow, but please rest assured that this is a problem that, you know, I and others are aware of. The financing of it is one thing, the practicality of it is another. And that whole retrofit problem is something that we are trying to tackle.
And Richard, while I've got you on the line, as it were, there was a question posed by John Johnson about a desire to set up a scheme to build some passive house standard housing in Darnell, and which would obviously be pathfinder in terms of local demonstration schemes in Sheffield, about getting local authority buy-in, about, you know, the planning processes, things like that. I appreciate that's a Sheffield City Council issue, but would the Sheffield City region be happy to see that happen? Would it be would it smile? Would it be able to show any influence?
It's after 5 o'clock, so I'm not going to speak in an official capacity and confirm or deny that. But yes, I mean, changing the way we build houses is high on the agenda for both the strategic economic plan and our net zero plans. So moving to modern methods of construction, to stop building things because they're cheap, but build them because they're cheap and good, is the answer. So I think everyone would welcome that. How that works on a practical level in terms of planning applications and whether that can be smoothed through and land be made available, I couldn't speak to that. But I think I can say that, you know, those kind of initiatives are welcome at all kinds of levels.
Okay, thank you. Let's go back to Andy. Is there anything you'd like to reflect on in terms of, just for people who haven't read it, the Arup report is very strong on the built environment, you know, the kind of things that are needed, and the costs of them by item, and the repayment periods by item. So it's very detailed and helpful in that respect. Andy, have you got any thoughts on either the training agenda or the sort of council processes to facilitate this?
I think other than pointing out the obvious that they're clearly massively important, I think the one thing to realise as well is the timescales involved here. In that as soon as you start talking about training, you need to change curricula, you need to then get people through those courses, you need to then get them upskilled in the workforce. You know, we've only got 9 years left to do this. These things need to happen really, really quickly. So it's the issue not only of doing these things, but doing them ridiculously fast as well. So I think it's a case of prioritizing the areas where we can have the biggest bang for the buck in the short term, but also looking at the longer term as well. We might want to start looking at individual buildings, such as Richard was saying there, to catalyze the market by using centrally owned stock, domestic and non-domestic, and then using that as a sort of a way of confirming to the market that the opportunity is there. Then you get more people into that market, which then builds momentum.
Yeah, thank you. Okay, we're coming towards the end now, so I'm just trying to manage our re-entry. There's a question from Dave Campbell in the Q&A, which is about like heavy industry in Sheffield, and what can we do about the energy needs of that kind of industry. And if Chris Broom is still on the call, Chris, you might want to just say a few words on your favourite subject of hydrogen in response to that in a second. And then, but before that, I think the first question on the day was probably put in by Dave Berry, which was about stimulating the local economy. So, Dave, if Dave Berry, if you're still here, would you just like to, if you'd like to speak to anything that Carsten said about that regenerative effect on the local economy, please do so now.
I think I was a bit concerned about the pay scheme. We've seen with the fossil fuel economy in Sheffield that it's been very much dominated by the corporate bodies, and much of the profits from those schemes have left the area and have left people poorer. You know, what is, you know, we need to think about generating capital locally and making it as sticky as possible to stay in the economy. And I worry why we're looking to drag private finance into this with its poor record, really, when really public finance is probably a better answer.
Carsten or Ryan?
So there's quite a few bits to unpack there. I'll hand over to Carsten in a second for the limitations of the public finances. I'm sure he will talk at length about modern monetary theory and other ways of money creation. But when it comes down to it, I personally do feel that there can be more public money going into this. I've said that multiple times here. It comes down to an ideology shift in the current government and what they think is feasible. The other part of that question, though, is the sheer amount of capital required. You know, we're talking trillions. I know you mentioned the chat, $750 billion produced through quantitative easing. We're talking trillions per sector here. So there will come a limitation, but again, you know, I'll hand over to Carsten for that in a second. On the pace side of it specifically, so the scheme isn't up and running yet, is the first point. So there are ways to still design this. It's not just about the interest rates that are being paid out, though. It's about how we talked multiple times about supply chains, about the companies used. And I think your question was specifically around the big six. You can look at these working with local supply chain companies to build out the local jobs force. That's completely feasible. And in a few of the other things we're working on, that is the crux of the central part of the solutions we're working on. You know, we talked about the Green Homes Grant earlier and the fact that government produced money, but it wasn't all utilised. And the big blocker was installers not being ready. We think this should be done the other way around, where you look at getting installers lined up first and then bring the capital along. So you say to installers in Sheffield, for example, we're going to get 1,000 people that want to install heat pumps, that want to perform wall insulation. If we can get all that demand ready, here's the finance for it, and you will be the people to perform it. And I personally believe that should be done at a local level. So it's not just the interest rates that we need to look at here, it's the way that who the money is being spent on, which I think comes across to your question about the big six and about draining the money out. Carsten, sorry, I know you wanted to come in as well.
Oh yeah, so just on how sort of industry, how decarbonization could be managed. We've actually called for an industrial strategy for steel in particular, but also we'll do more on other industrial sectors as well, where we argue that there needs to be central government funding to support the transition. So, like, you know, in a similar way to homes, there can be retrofitting of, for instance, steel plants, but also to make the economics work, there needs to be some government funding, and as you were saying, there needs to be local buy-in, and it needs to be happening in a way that supports the local economy. We estimate that there needs to be about 260 million per year investment in these type of industrial strategy for retrofitting industry, but that then can turn into local jobs, and actually, you know, can give industry a better name, because currently steel and industry has a sort of polluting label, but there can be a green strategy for that.
Thank you. Chris Broom, are you about? Do you want to say any final words on beloved hydrogen? Go for it, Chris.
Chris, you should be able to unmute yourself now.
Right, I think I've just got it. Can you hear me?
Yes, we've got you now.
So hydrogen and industry, there's a lot of government focus on ensuring that industry can be decarbonised. It's very carbon intense. Related to that, hydrogen locks in fossil fuel usage and emissions, because the only way you can produce it in really large quantities probably is from natural gas. So on what Carsten's just been saying, you have to be very careful in supporting high carbon industries to compete with other countries that are also supporting their high carbon industries for fear of losing jobs, because there's no way we can support the level of industry even that that we have and meet the government's targets, yet alone Green New Deal targets, because we have to go so fast. So I'd very much support, I think it was Carsten that was saying earlier, we need to be investing in things like care, looking after our natural environment, local food growth, because we have to, unfortunately, we're in an uncomfortable position. There's no way we can sustain the high consumerism economy that we've got. Thank you.
Chris. No, thank you, Chris. So we're pretty much out of time. Before I thank the speakers, I just want to go back to my crowded slide at the beginning where we had the two columns on the right-hand side. The purpose of today was to, this evening, was to give people some encouragement that there are sources of public funding available for the left hand of those boxes, and there are sources of, let's call them alternative sources of funding available for the right-hand column of boxes for those different investment areas. And I think the trick now for Labour's new administration, with no party with overall control, is to grapple with that, with those columns and those issues, and the preliminary work like the training agenda, for example, to grapple with those issues, find the sources of funding, put the packages together in the way that Joseph has described, and exploit the range of stuff that Ryan has said is available to us, to everybody, and get the benefits that Carsten was saying can arise from that level of public investment if we can retain it in the Sheffield South Yorkshire economy. So Natalie's not with us, but thank you, Natalie, if you're watching this somewhere 3 months' time from the beach. Thank you to Ryan, to Joseph, to Carsten, to Andy for joining us. That was very helpful, Andy, because the debate could have gone down that way, so that was very useful. Festival of the Debate for helping us put this on. So I look forward to this being the talk of the town for months to come now in Sheffield. Thank you, everybody, and good night.